Hey traders, if you're trading gold, Forex, or stock markets this September, I've got 3 important tips to make you a more profitable trader. Because trust me, you're going to need them. September is always a busy month in the markets. Traders are back from the summer holidays and there are a lot of big events. September this year is packed with major market moving developments. This year, more so than ever. The U.S. Federal Reserve hasn't lowered interest rates since March 2020, and they're expected to deliver a rate cut this month, which would be the first post-pandemic cut with massive implications for gold, Forex, and stocks. This is a month where fundamentals, technicals, and seasonality are more important than ever in your trading strategy. In this video, I'll talk about how to incorporate all 3, share tips to help you avoid losses and hit more winners. But the markets are also ever-changing. You know this, I know this. So make sure you join my Monday morning live stream at 8:45 a.m. New York time, where each week we'll dive into the developments and the market fundamentals together. Subscribe to the channel and hit the notifications bell so you don't miss any of the live session alerts. We want to make September one of our most profitable ones, even if the markets are selling off. My first tip for you today is all about interest rates. We all know the Federal Reserve is planning to lower interest rates in September, and that's usually great news for gold. Gold has already hit a record high in August, and a lot of people are wondering, how much further can gold rally? How much longer can it climb upwards? I'm going to show you some charts that will show you why September could be another strong month for gold. So let's take a look at this first chart. In this chart, the yellow line represents gold, and the blue line is the Fed funds rate. I've marked where the Federal Reserve starts lowering interest rates with an arrow, and you see a few arrows on this chart. As you can see, interest rate cuts often trigger massive rallies in the gold market. Interestingly enough, gold typically starts moving up before the Federal Reserve even makes their first rate cut in the cycle. And that's where market expectations really come into play. And market expectations are a very big part of my trading. But the large move, the big move, usually happens once those cuts begin. So while gold has hit a record high in August in anticipation of Fed easing, we could certainly see more gains in the coming months, especially since Fed Chairman Powell made it clear at Jackson Hole that rate cuts are on the way in September. As a trader, what this chart should tell you is that you should be leaning towards long gold trades and be cautious with short ones. Keep your positions smaller if you're selling and be quick to lock those profits. And if you're long, allow it to have more breathing room. When you're in a short trade, grab your profits and go. Now, for my second trading tip. September is historically one of the most turbulent months in the financial markets. I mean, it's known as the September slump for a reason. And it's actually the worst month of the year for stocks. Let's break this down from a fundamental, technical, and seasonal perspective, because that's the way I like to look at things. There are plenty of reasons why stocks could correct in September. The U.S. economy is slowing, showing signs of weakness, retailers are warning about slowing demand, and companies are cutting back on hiring. This could spell big trouble for the U.S. economy and the U.S. markets. And the Federal Reserve has already expressed concerns, talking about the need to keep the labor market from really pulling back. So in many ways, we should all be concerned as well. Technically, stocks are looking overbought, and we're seeing signs of a double top, as you can see in this chart here. Stochastics, which measures overbought and oversold, are above 80 on the daily chart, and we're starting to see lower lows on the S&P. So there's a lot of technical factors pointing to the top. Now, if you look at this chart, you'll see that the Nasdaq's correction has already started. On a seasonal basis, September has always been a weak month for stocks, going all the way back to the Dow's creation in 1896, and that's certainly a very long time ago. Since then, September has averaged a loss of 1.2%, compared to an average gain of 0.8% in all the other months. It's the only month with a negative average return. And it's remarkably consistent on how stocks perform poorly in September. So with all this in mind, what does it mean in terms of how you should trade? Well, you should trade smart this September by being aware of the risk and adjusting your strategy accordingly. While past performance does not guarantee September weakness this year, it's certainly worth noting that underperformance of September tends to be even more pronounced during election years, and this is an election year. And with all the uncertainty surrounding this year's U.S. presidential election, that risk is even greater. Now, given how well stocks performed in August, they're particularly vulnerable to a correction in September. As a trader, when you consider all of this, the fundamentals of the US economy slowing, the potential double top that we're seeing on the charts, and the seasonal trends of the stock market typically weakening in September, these are pretty strong reasons to favor risk-off trades and that anticipate weakness in equities and currencies, and to exercise caution with any long stock trades. My third trading tip focuses on the US dollar and the Forex market. Historically, September has been a bearish month for dollar yen, the British pound, and the Australian dollar, which aligns with the typical stock market sell-off and the heightened risk aversion that we may see as a result. When stocks drop and investors get nervous, they will sell these riskier currencies like dollar yen, the British pound, and the Australian dollar. And this could oftentimes lead to even greater weakness in the crosses like Aussie yen and pound yen. So definitely keep an eye out for that because those are very vulnerable. I would be avoiding the long trades and leaning more into the short trades. Interestingly, September is actually not a bearish month for the euro. In fact, it's historically the second best performing month for euro dollar. We just covered the seasonal trends, but let's talk about the fundamentals. Both the Federal Reserve and the European Central Bank are expected to cut interest rates. However, this will be the Federal Reserve's first interest rate cut in the cycle, whereas the ECB would be lowering interest rates for the second time in a row. And they may suggest that they might be less aggressive going forward, or they don't know what is the next step. If that's the case, you have one central bank with a clear expectations for more easing and one that sounds wishy-washy. We could see more upside in the euro dollar. In Forex trading, expectations are everything. It's not just about what the central bank has done, but what they plan to do next. So as I said, if the Fed is gearing up for a more aggressive easing cycle in the coming months, we could see Eurodollar rally in line with its seasonal patterns and seasonal trends. Technically, the US dollar index has already given back all of this year's gains. Remember, the start of the year was fantastic for the dollar. It was very, very strong. But, at the end of August, it's already given up all of its gains. But there's still plenty of downside. Remember, back in 2019 and 2020, when the Federal Reserve was cutting interest rates, the dollar index was trading around 96 or 97, and we're much higher than that now. So as data comes in and the fundamental outlook shifts, you need to stay on top of the fundamentals, technicals, and market sentiment, which is what I do for my own trades. This is kind of the thinking process and what I cover every Monday in my live stream. So make sure you subscribe to our channel and get notified about these events. Also, check out the links in the description below if you want to receive my Zip Trade Alerts, which turn all of these insights into actionable trading opportunities. We have not had a losing month in more than a year, so I encourage you to check it out. Now, of course, past performance is not indicative of future results, but I wish you all good luck in the markets, and I'll see you all next time.